This is the briefing for Friday, May 12th. This is one boring market in which to trade and invest for sure, at least at this point in time. I want to spend a little bit of time though because I think it's really important to understand what's happening in multiple time frames, especially in the spiders or the S&P. Now, this is a daily chart of the spiders, and I've talked about this in many of the past briefings. You can see the rotational pattern that it's been in. This goes all the way back to October of last year. And so you can see the up and down movement that we've encountered. Now, it is common for a market to pause when it reaches an upper extreme. And that's because traders typically step back and they try to determine whether there's enough strength in the trend to break out or whether there's going to be a rotation back through the range. And it's easy to see. You can see as the market came down here, it paused right there at that extreme. Wasn't enough selling pressure to take it any lower. Rotated back up. We got a pause at the upper extreme, then a rotation back down, then another rotation up, and then another pause. Now, this is one time frame of pause, of rotation. This is another time frame of rotation. So this is really important because breaking out in multiple time frames suggests an intermediate to longer term breakout and typically will lead to a very good move in the direction of the breakout, especially if this breakout happens to be to the upside. Now, I want to bring this down a little bit to a little bit shorter time frame because I want you to look at the last 6 days of trading right through here. This is a rotational pattern for 6 trading days that is at the upper extreme of this area of rotation and the upper extreme of this area of rotation. And you can see that more clearly right here. This is the rotational pattern for the last 6 days on a 30-minute basis in the spiders. So breaking out above about the 414, 415 area is going to suggest the potential for a multiple time frame breakout. Breaking out to the downside up from this area, this is about the 408 area, this is about the 414 to 415 area. Breaking out of the 408.50 area is going to suggest the potential for a rotation down to test this 402 area, which is this low right through here. Breaking that is going to suggest rotation back down to test the 380 area. Then it would be a decision process for the market to decide whether it breaks this low, and then we get extension down to test the October lows right around the 340 to 350 area. So you can see from a multiple time frame perspective that this is extremely important. So we have one time frame, 2 time frames, and 3 time frames that we're looking at in the spiders. And it certainly would suggest that if there is a breakout to the upside, that you're certainly going to want to be long. Now, the key to that breakout is going to be volume, because you can see we've had attempts to break out, and you can see if you look at this breakout here and the sellers came in and drove it down, you can see a selling tail right there. But look what happened with volume. On that day, volume absolutely collapsed, and it has been continuing to collapse. Now, it is common for volume to be lower in a rotational pattern. So it doesn't surprise me that volume is as low as it has been for the last several days. But if there's a breakout to the upside, volume should be increasing. If there's a breakout to the downside, volume should be increasing. Now, if we break out to the downside through here, that's going to open up a potential test of the 402 to 403 area. So you're going to want to see volume ticking up. Now, you don't want to see volume coming in all at one time, just like right here. This is a good example. You can see the spike in volume here, and that led to an exhaustion of sellers, and that led to the rotation back up. What we want to see is volume building, something like this, not a really good example, but something like this. Now, also, breadth is declining. So we're not strengthening from an internal perspective over the last 6 days. In fact, the internals are weakening. If you look at what's happening with breadth, 52-week highs minus 52-week lows on the NYSE, going negative 249 shares at the end of trading today. You can see there's a general downward slope to that. So we really do not have the internal strengthening at this point, which would be an early indication of a possible breakout to the upside. Once again, whether the breakout comes to the upside or the breakout comes to the downside, it's going to be very important that it be followed with volume. If it's not, you're just going to get a false breakout and a rotation back down just like that, and just like this occurred right through here. Looking at where we are in terms of the shorter term charts, you can see basically that this rotational pattern is pretty consistent over the last 6 trading days. Really very interesting to gap up and then sell off to test the lower extreme, and then all of a sudden rotate back and close at the middle of the range for today. Actually, the middle of the range for the last 6 days. Really, this is just a very, very difficult market to trade. Now, the NASDAQ, in terms of the Qs, is a little bit stronger. It is showing higher highs over the previous day. But you can see now what's happening with the NASDAQ is that there's a huge breadth divergence going into each of the previous day's highs and especially into today's high. So you can see that this downward slope, looking at it on a daily chart, is a little bit easier. You can see here, you can see the general upward trend breaking above the 325 area, volume falling off, and breadth falling off as well. This does not portend well for the NASDAQ unless the internals change to support price. And as of right now, they are continuing to weaken and even weakening more in today's trading. Looking at the Russell is really diverging from the other indices. They're testing their upper extremes. The Russell is testing the lower extremes. So it's going to be interesting. You may want to keep an eye on the Russell even if you don't trade it, because if it does break through 170, then that's going to suggest the potential for the others to potentially break through at least their short-term support levels as well. You can see volume falling off in the Russell breadth falling off as well. So this is not a very strong market to the upside, at least at this point in time. Now, I've said it many other times before, is that there's always a higher probability that price will correct to the internals. But there's a lower probability that the internals will correct to price. And that typically occurs around a news event. So if there happens to be a news event that corrects the internals to support price, then that would suggest the potential for a breakout to the upside. On the other hand, if there is no news event, if the internals do not begin to strengthen, then that's going to suggest the higher probability that we're going to see some type of rotation back to the downside. We're not quite oversold. We kind of bounced off oversold territory in the NYSE, really not getting there yet in the NASDAQ. So it doesn't preclude the market from going higher or lower, at least with this indicator. It really is much better when we're at an extreme level, and it can predict whether a trend will pause and change or whether there will be a directional change in the opposite direction. Looking at total volume in the NYSE is falling off pretty dramatically and falling off in the NASDAQ as well. So you can see even as we move up through this area here, total volume is trending lower in the NASDAQ. So it's just a very, very difficult market to trade at this point in time. I mean, even just looking at the 30-minute chart and seeing the up and down movement over the last 6 days is just very extremely difficult. I was watching this area right through here, and I thought, well, they're going to break through this low today. But as soon as they reach this low here, this area here, and I had my trend line set with an alert on it, it bounced right off of it, and just it was incredible going into the close today. And same thing with the NASDAQ, with the Qs. You can see the rotation back up, opened higher, traded lower, and then opened back up and almost traded back through the half of the range in today's trading. So next week is going to be very interesting. It's just a difficult market to make money in right now because of the chop. But hopefully we'll see some type of movement and a breakout of this range at some point in time. And when we do, it is going to be a good move. Key, once again, is volume on a breakout. Now, keep in mind, we've got three areas of rotation, and breakout of one will lead to potentially, especially to the upside, a breakout of a much greater degree time and price rotational pattern. Breakout to the downside simply opens up the next levels of support, a higher probability that they will be tested. If they're broken, then that opens up testing the next level of support as well. Should be an interesting week next week. I certainly hope we get a little more opportunities than we've had over the last couple weeks. Have a great weekend. I'll pick this back up for subscribers on Monday.